from my view at LendingClub on what makes a successful partnership and part of my pontification, what might make a successful BaaS bank down the road, over at LendingClub, we looked at some banks to acquire, obviously, and we partnered with and looked at other banks to partner with. And I think in today's environment especially, with where the regulators are at, the number one thing that, and you guys won't call me crazy, I don't think, the number one thing that a BaaS bank needs to do is really embrace its regulator and communicate much more frequently and in much more depth than it has in the past. That is good for your fintech partner. I think gone are the days, which weren't widespread but existed in some pockets, that it was good for the fintech, good for the bank to not embrace the regulator. The fintechs wanted less regulation. They didn't want the bank to be a pain. That's totally flipped on its head to the extent it existed in some circles. Now it's you want your bank asking questions. The bank wants its fintech participating because the bank is held accountable so much more today than it was 5-10 years ago by the regulators. Yes, the regulators have put this great bow around prior guidance from 2013, repackaged it here this year, but it's the same guidance, whether it's the FDIC, essentially, the Fed, or the OCC. Nothing's changed. What's changed is what's happening on the ground, and that's what you guys are probably feeling. That's what all the BaaS banks are feeling, and it's good for your fintech to know that you got it covered. You're not going anywhere. Your programs aren't getting impeded. So the successful BaaS bank, I think, embraces its regulator. And the second point I'll make here is a successful BaaS bank even thinks about, and some are doing this, even thinks about, if we're going to be held so accountable for all of our fintechs and their regulatory compliance, we can make the choice to put it on them and manage it. And you got a third-party vendor, you have a fourth-party vendor, or we can bring a lot of the stuff that we are good at in-house. I mentioned LendingClub's partnership with LendBank in the beginning. They were good at the risk management and the compliance. They helped us become a bank. We needed that to become a bank eventually. And that dichotomy still stands. Let banks be banks. Let fintechs be fintechs. And the bank can actually bring in more of these compliance services. Some are already doing AML and BSA for the fintechs, a very common need of almost all fintechs. What about fair lending? What about compliance testing? What about model risk management? These are things that the banks can begin to do more and more for the fintechs. And that way they can be held accountable to the regulators. And that might be what we see in the future. And I would, Phil mentioned new partnerships here at AFC this morning. I would encourage banks. You don't have to do it all yourself, actually. There are great reg techs out there. Phil mentioned one. Fair Play is another that's been a long-time AFC member in the fair lending space. Banks can be the center, the hub, between reg technology and their own reg tech and their fintechs. And that might be a model in the future going forward.